Welcome back. So now let us talk about methods of counting level. We've actually discussed our market maker cycle, and you will agree with me that actually been amazing, because I'm pretty sure you've actually gone through your charts and you can see these things happen over and over and over again on your charts. So now we want to look at how to count our level. We have different methods of doing it. Now, why must we understand how to count our levels? It's actually very, very important. Now, you have to know before you trade in Forex, before you pick any trade in Forex, you have to know where you are in the market. Now, if I am going to a place, I have to actually first determine where my location is at that moment to know exactly how I'm going to go to that destination I'm going to. But unfortunately, a lot of people jump into trade, then they now start to look for where they are in the market. Now, as a market maker, as you, a trader that trades along with the market maker, you actually have to put this thing in your mind. Your number one duty is to know where you are in the market. If you can figure out where you are in the market, then do not place a trade, because the moment you know where you are in the market, it will be easy for you to know where to enter the market, to pick an entry in the market. So without you understanding where you are in the market, you cannot place a trade. You must not place a trade. Now, what do I mean? Okay, let's say you want to enter a market now. Let's say you check a pair. Okay, let's say you check a particular pair and you couldn't figure out by yourself where the market cycle is at, or where you are at, where your position is at in the market. Your duty as a trader is to leave that market alone, go to another pair and check that pair out. The moment you can easily figure out, counting level is not difficult. So if you can't figure out what level, where you are in the market, that means that market is not tradable. That means you cannot trade that market. That means you are lost in that market. That means you should leave the market alone and check another pair. Now, I want to teach you the various methods we are going to be using to count our level throughout the course of the study. Now, you have to use this method, and this method actually work hand in hand. These methods work hand in hand. So if you pick one, you can divert to the other one, or you can just use everything to confluence each other, right? So let us look at the different methods of counting levels. Now, I will start with our popular one. I discussed it in the last class while I was introducing you. We call it pullbacks, or consolidation. We use pullback or consolidations to counter levels. So we use, number one, we use pullback or consolidations to count our levels. That's the first one. And the second one is we use two EMAs to count our levels. We use EMAs to count our level. And the third one we'll be discussing is we use number of days. But you know, the first number of days, but you know, the first two is actually very, very important. Number of days is actually important, but we use it to confluence these ones. And also I'll just say ADR. Let me just use ADR so I can explain what ADR is all about. I will use ADR as number 4. So I can explain what ADR is all about. Now, are you ready to go? Are you ready to move? Because this is the beginning. We've done introduction here. It's becoming more lively, but this we're entering more technical stage of the course, and I will tell you again that this course is everything you need, right? Everything you need. Now, understanding this thing, where you are in the market, anytime you open your chart, understanding where you are in the market gives you the total leverage you need in the market. Gives you this, how will I put it? Gives you this confidence, this confidence that, okay, now I know where the market might likely go. I can actually just pick my trade and the market is going to go my way. Now, let us take it a step at a time. Now, let's go to consolidation. I will try as much as possible to break this course because I don't like my classes to be too long. So I will try and break it into 2 videos. Probably would take 1 or 2. Probably we'll take pullbacks and EMAs in this video. Then we'll take the next 2 in the next video. And you always know that we are always going to take practical sections. So that you say, okay, this guy actually know what he's doing. Yeah, I know what I'm doing. I know what I'm doing. But just for the sake of it also, you can understand it very, very well. So we are going to go through the practical section. So let us start. So consolidation method of counting level. I've already talked about consolidation method. I've told you what consolidation method is about, but I just explained it as what would I call it? As introduction. So I would like to take it one more time and explain it well to you. All right. So let us go ahead and check this out. This is our cycle. You will agree that with me on this, that this is our cycle. Hope you can draw it now. You can draw it very, very well now. So now let us see consolidation or pullback method. Remember, we are talking about consolidation. Don't mind me. Consolidation, don't mind my writing, or pullback method. Now, this is our cycle. This is our this is our market maker cycle. These things, like I said, happens 80 to 90% of time in the market. So the moment you are able to know where you are presently in the market in this cycle, means you will be able to base your trade effortlessly. You will be able to predict the market effortlessly. So this is the first thing we have to consider. Now, how do we count levels using consolidation or pullback? That is the question we should be asking ourselves right now. Now, as we've explained, we both agree that this is our peak formation. Right? Now, if this is our peak formation region, how you will agree with me that this region here is more of a consolidation region in the market. That's why you say we are using consolidation. Now, peak region can be like at times it can be like this. We saw the likes in the last video. At times it can be like this. Don't worry, we are still going to take it. We are still going to take it. Now, look at this. This period is consolidation. This is the first level. We call it level 3, right? You agree with me? We call it peak formation I, and we have all other words, all other names attached to it. We have the low of the day, the high of the day, the low of the day, the high of the day, the high of the week, stop hunting period. Now, this is the first consolidation period in the market, and at this stage, we know that, okay, at this particular stage of the market is likely highly going to reverse. We have it at the back of our mind that, okay, now we are here, yeah, we are here. Now, the market is likely going to reverse at this particular point, right? So we have it at the back of our mind, okay, I think now that the market has been coming up for a while, once it gives me this period of peak formation, once it gives me M-like formation in the market, after a complete cycle from the down, I know, okay, yeah, now my market is going to reverse and it will start turning downward. Now, that is the first period in the market, the first level 3 period or the peak formation high period in the market. Now, market moves like this. Let me show you. Level 3, level 1, level 2, and then level 3. Now, these level 3s are always what? Our peak formations. So this one is either peak formation high, and this one is peak formation low. And this one also can be peak formation low, depending on the directional movements. And this one will be peak formation high. So now let us take it again. Now, market was initially moving up, right? You agree with me that market was initially moving up. 1, 2, the market joined here, 3. Then all of a sudden, market gave you M. Now, at this particular point is your first consolidation period for a reversal. It has a unique pattern at that particular point, like M formation structure. Now you have to pull that at the back of your mind. You have a unique pattern like what? Like M formation structure. So the moment you see that after a 3-level count, you know, okay, yeah, my market is actually going to what? To drop. Now, how do you know that the market is going to fully drop, or the market is ready to drop, or the market is going to drop? It is when you have your peak formation structure. Now, it is until market breaks the consolidation region of this peak formation structure before it enters another level drop. Now look at this peak formation. Now all this region here is what is a consolidation period in the market. Now until market beats this low of this consolidation period, this nadir, don't worry, I will tell you what nadir is later on. This period in the market before you would enter another level. So if markets beat this consolidation period in the market, this low here, the market breaks through this place, we know that, okay, yeah, we are in what? We are in the level 1 drop. Remember, level peak formation high. So market broke through this region here. And the moment market broke through this region, we know, okay, we are in level 1 what? Drop. And now, at a particular point in time, market must take a break. Market just move one way. Why? Because the moment market moves one way, everybody will make money from the market. That is, you are depriving market maker from making money. And their sole business in this market is to what? Is to make money from themselves. Put that at the back of your mind. They are not in the market to give you money. They are in the market to take money away from you. They are in the market to make money for themselves. So if you don't know how to trade alongside them, you will always end up crying. Sorry for using that language, but that's actually just the simple truth, because they will always take away from you in the market. So you actually have to know exactly what they are doing in the market. Now, when market drops, like I was using relay race the other time, when a runner, the first runner runs, there must be a moment of what? Exchange in batting. Now we have 3 levels of drop: level 1, level 2, level 3. Now the moment of that exchange in batting is what we call our pullback or consolidation method in the market. I don't know if you get what I'm trying to say. So this method is what? Our pullback, or this period is what we call our pullback or consolidation region in the market. Right? Now let's look at it again. Now, market moved away from what? Our peak formation region, which is what? Our starting point of our auxiliaries. So move out right here, and at this particular point, that is where the gun was shot. On your track, set, bah, you grab. Now, the first level started. He started running. He runs. So he started running. Now, at a particular point in time, while running, it must exchange the baton with him with another to another. He must give that baton to another what? Another runner. Now, at that moment, there is a moment of what? A pull back in the market. Because if we are to get it very well, as at that particular point, the second runner we start charging up gradually, while the first runner we try to but stretch its baton to him. Now, at that particular point, we call it a pullback region. That is the period where market takes a break from its what? Original movement. This is a period where market maker deceive people into believing that the market is about to start what? Buying, or the market is about to consolidate. So a whole lot of people will be indecisive in the market. Indecision will kill a lot of people, a lot of traders in the market. Why? A lot of traders will keep opening positions of a directional movement they don't know. Now, you as a market maker, when you notice these things, you know exactly where the market is still going to go. Now, look at what the market did. The market pulled back, and then at this particular region of pullback, we call it what? Our level 1 consolidation, our level 1 region in the market. Remember, we have our level 1 drop. Then at that particular region, we call it our level 1 what? Consolidation region in the market. I don't know if you are getting it. Are you getting these things I'm saying? I need you to get it. I need you to get it. I need you to get it. Are you getting these things I'm saying? Now, at this particular point, let me tell you what happened. Now, this particular point might take a few hours, might take, depending on time frame, let's use 1 hour. Okay, we are using 1 hour because we said we'll mark our chart with 1 hour for now. So it can take a few hours, it can take a few days, it can take many hours, it can even take a week plus. It can take as long as it wants. Market maker will not move away from a level until they have enough money to take away from that level. Put it at the back of your mind. Now, let's assume the market pulled back and the market started ranging here. Now, how will you know that the market has moved into another level? The market will move into another level when it breaks this lowest low, when it breaks this low of consolidation here. So the moment the market breaks this low, it enters another level. Now, it means that it has exchanged the baton with what? The second runner. It is as simple as that. It means it has exchanged the baton with the second runner. Now it's the duty of the second runner to start what? To start running. Now the second runner too will run, which is our level 2 what? Level 2 drop. The second runner too will start running. At a particular point in time, it must change baton again. Now, at this particular point, when the market slows down and starts consolidating, we know, oh, okay, the market is about to what? To rest. So at this particular point, we are in our what? Level 2 consolidation. I just like to call it level 2, and I like to call this level 2 drop or thereabout. Now I will explain. Okay, I think in this video I will just try and use ADR and consolidation method, so it is easier to explain both of them together. So I will just, and the next video I will use EMA and numbers of days. All right. Now, markets then look at something. Now, at this particular point, market drops again. After it breaks this low, it enters its level 3 drop, And at this particular point, at the back of your mind, because you know the cycle, market maker cycle, you know exactly what next is likely going to happen in the market. It is as simple as that. Now, at this particular point, look at it. Market then turn back to give you what your peak formation what your peak formation what your low. So this is our level 3 of peak formation low. You remember what I said the other time? Is it not simple? Look at something. I said something like market moves from what? Level 3 to level 1 to level 2 to level 3. So in this scenario, we have a peak formation low, peak formation high, level 1, level 2, and peak formation low. Now again, I will take it one more time so you will get it absolutely well. So I will take it one more time. Do not worry. This thing is as simple as you can possibly think of, and very, very interesting. Very, very interesting. Like, it's the best you can possibly have. All right, let's check it out. Let's check it out. So this time around, let's take a look at uptrend. Let's see what an uptrend market is likely going to do, right? Okay, are you ready? All right, okay, now remember we said market moves in levels, right? Now this market, we want to count this market with okay, now let me share my screen. I think I should share my screen again and show you for my MT4. Okay, all right, yeah, good. This is a good one right here. I'll just show you something very simple, and we call it that's it. Okay, so let me show you something very, very simple and easy to count. Now look at this, our levels. Let me show you. Let me insert. I want to insert shapes. I want to insert rectangle. Let's mark our levels the ones we can vividly see. I don't like to my rectangle should be like this. I want to change the properties. I'm trying to use system now. I want to change it. I'm coming. Just let me change the properties of my rectangle. Properties. Why now? Hello, Baba. I'm in class. Eh? Okay. Sorry for the network issue. So let us go ahead. Let's continue. Sorry about that. That was network. So as I was saying, I want to make my lines better so that you can see very, very well. So I will take in the line. Okay, now good. Now this is my peak formation region here. Can you see? This is my peak formation region here. Now look at my peak formation region. Now after my peak formation, can you see my M? And it shows that the market was coming up initially. Now look at what happened after when the market was moved away from there. Let me insert again. Insert shapes, rectangle. This is my first level drop. Then what did market do again? Market drop. Can you see? Market broke that region and dropped. And look at what the market did. The market consolidated for a good number of time, for a good number of weeks. Look at something. Look at this long consolidation the market did for level 2. Can you see? You see what I'm talking about? So let us count the numbers of week 1, 2, 3, 1, 2, 3, 4, 5. About 5 weeks. Market consolidated for about 5 good weeks. Now the market continued its movement down for a third level drop. Can you see? So the market dropped 1, 2, and then 3. Then came up here for a reset. Don't worry, we'll talk about reset very soon. I've been talking about reset. I've been talking about reset over and over again. Can you see my formation here again on the 200 EMA? Don't worry, we are going to talk about what reset is about. Now, let me check. I don't want to show you any complex chart for now to avoid complications. So now look at this. Okay, good. This is another one, guy. This is obviously very perfect. So let me show you this one's good. Now look at what the market did here again. Let's see. Now let's insert. I'm using, the other time I used my phone. Now I'm using my system. Now the market did a peak formation low here. Can you see it very well? Now after it did a peak formation low, what did market do? Let's see. I will keep using insert. Can I get arrow? Let me see. Can I get arrow? Okay, I don't think I can. Okay, okay, arrows. Yeah, I think I can get arrows. Let me see. Let me see if I can use this arrow. Okay. All right. Let me just continue. I'm going to keep using my what was it called? My rectangle. Now look at this. After the market left here, you will agree with me that the market rose up. Look at how the market rose up. Can you see? The market rose up. Let me use, okay, good. I think I can mark better with this. Let me use my tools to mark. Now, look at this. This is my peak formation region in the market. Do you agree with that? Now, after that, market rose up, right? At this particular point, the relay was going on, and at this particular point, market needed to what? To change back then. Look at it. Market then dropped back. Look at this. Remember, I said it could take a few hours. Look at this. This is a few hours. You will agree to that. It's a few hours. Now, after the market dropped again, market rose up again, came to this place, did another consolidation region in the market. Can you see? The market rose up back and gave us what? Our peak. Can you see its consolidation period also? This is our peak high. At this particular level, when the market was doing the third rise 1, rise 2, rise 3. When the market was doing the third rise, we knew the market will soon reverse. We knew the market will soon do what? The market will soon reverse. Now, that is exactly what I'm trying to say. You know where the market is going to start this cycle, where it's going to probably hold on, like consolidating the market, and where it's likely going to pull back. Now, look at this. It did a pullback and started dropping again. Then it gave us our first level here, gave us our second level here, then came down here for a peak for a peak flow. Can you see? Just like the way, can you see what I'm talking about? Now, at this particular point, yeah, you may be confused. Now, it came up here. There's something we call peak reset. So all this region here in the market is a consolidation region for a peak reset. You know, it's going to be a peak reset, so you don't bother yourself. All this up and down, it does not bother you. You know how to pick your trade even during this region. Now look at what the market did. After it's left, look at something. Let's draw a line to show us our low. Look at it. So look at how it broke through our peak reset region, drop. I will explain what peak reset is about. Give us our level 1 here, drop. Give us our level 2 for more than a week, then drop, and give us our what? Our W2 for rise again. So let us see. Let me move back to chart. So can you see? Can you see? It is actually as simple as that. Can you see? Look at what the market did again here. And the market is simple. You don't need to stress yourself. Okay, I just explained this. The market is simple, eh? You don't need to stress yourself. Now, I hope you let me check probably one other pair and use it to mark again. So that we keep cooking, we keep making things easy for ourselves. So let me show you one more, just one more. Let's see one more chart. Anyone? So you won't be like, this guy is doing magic somehow. I don't understand what this guy is doing. Like I said, I would always try to use something simple for now. Now, don't worry, it looks complex. You will get everything. Now, okay, let me just look for something not complex. Something not complex. Good. This is not complex. Yeah, let's see. Look at what the market did here. Come on. All right, market did a level here. Rose up. Give us our level 1 year. Can you see consolidation? Rose up again. Give us our level 2 year. Then rose up the third time to give us our what? Our peak formation. Can you see? Market is that simple. I'm telling you, you are actually going to enjoy this. Like seriously, you just have to enjoy this. You are definitely going to enjoy this. Now, these things keep happening in the market. See our levels 1, 2, 3. Came for a reset. 1, 2, 3. Came for a. It is as simple as that. Market will always give you. Let's check one more. Let's take one more. Because of our. Let me just check. I'm trying to look for something simple for a start, not to complicate things for you. Now, the moment we start entering time frame blending, peak reset, you will get everything perfectly well. Like very, very well. You get everything well. Now, look at this. Sorry about this. Hold on. I have something popping up on my screen. All right, let's continue. Now, look at this. Peak formation, you agree. This is a peak formation low. Market did 1, consolidate did 2, consolidate did 3. Can you see? Let's say it's hard. It's not hard. It's not hard. Okay, let's keep looking. Okay, this is another one here. Sorry for all the red and green lines. It's because I'm zooming too much in. But I have to zoom in so you guys can get the level thing very well. Market still around peak region. So this is the peak level 1 here, level 2 here, and did the peak formation are here. Now, you don't expect the market maker to always give you something that you will easily understand. But the moment you can familiarize yourself with chart, look at this peak formation here, it dropped for level 1 here. Look at how long it took. More than 6 weeks. I could remember this particular chart, this trade. More than 6 weeks. Look at it. It dropped second level, pull back again, then gave you the third level. Can you see? Can you see? Use 6 weeks for level 1 consolidation. 6 weeks. Then use just like few days for level 2. Okay, sorry, few hours for. Sorry, I said 6 weeks. I meant 6 days. I'm sorry. I'm on 1 hour chart. I thought I was on 4 hours chart. Let me check it. Yeah, on 1 hour chart. On 1 hour chart. So it's few days. Take about 6 days. Then look at this. This one is few hours. This one took about few days. Level 1 was consolidating. Look at the low. Look at when it broke through the low. Can you see? It entered level 2. Then we have our level 3. Market is that simple. Right. Let's go back to our whiteboard. You understand market cycle that way. Now we are back here, our whiteboard. Let's talk about the ADR. What do I say? Let's talk about the ADR. What is ADR showing us? What is ADR telling us? What prophecy is ADR preaching? Let's look at that and let's let us work on that also. This thing is just getting interesting and interesting as we go. Now, what is ADR? Let me first define ADR. ADR means traders ADR, sorry, average daily range. Average daily range. That is the meaning of what ADR. ADR means average daily range. It's as simple as that, nothing complicated. Now, what is the meaning of ADR? ADR means the extent, the relative extent to which a particular pair can move within a day. The relative extent to which a particular pair can move within a day. That is ADR. Now, if I'm in a market and I pick my trade, I should be looking towards, let me look at where the low of the day is starting. Where we, okay, let me just take it a step at a time. I'm coming. ADR. Now, ADR means the extent to which a particular pair can move in a day. Now, unfortunately, we don't have ADR template on phones, but on your on your BTMM dashboard, you have your ADR just there. Now, I want to try to explain what ADR is all about to you. Now, ADR is the particular extent to which all the candles in a pair can move in a day. So it means that we have a certain numbers of pips as allocated to every pair. We have a certain number of pips range allocated to every pair movement every day. Now, some pair, you will say some pair are not volatile. You have actually asked the reason why some pair are not volatile. It is because of the ADR on that pair. Yeah, you see, I don't want to enter AUD NZD because I feel AUD. You say you don't want to enter AUD NZD because you feel AUD NZD is not volatile. Now, the question you should actually be asking yourself is, why is AUD NZD not volatile, and why do you like trading GU? Because you feel GU is volatile. Why do you like trading GBP NZD? Because you feel GBP NZD is volatile. Yeah, right. But the truth is that the reason why these ones are volatile and that one they are not volatile is because of what the average daily range as located to particular pairs. The numbers of pips to which that pair, the range of number of pips to which that pair can move in a particular day is what we call ADR. So now, how does this associate with our what? Our counting of levels. Let me tell you. Now, each drop is considered ADR. So we say this is ADR1, or you remember level 1 drop. So that's another name for level 1 drop. I actually didn't want to mention it right from the beginning so you can understand it, and we are going to definitely show you on our chart. This is ADR, another ADR, ADR2, ADR times 2. We call it our level 2 drop, and this is our ADR times 3. We call it our level 3 drop. So all this happens on H1. Keep it at the back of your mind on H1. Now, 3 ADR equals to what? 1 complete cycle. So 3 times ADR equals to one complete cycle. We have one ADR here, one ADR here, one ADR here. So 1, 2, 3. 3 times ADR equals to what? One complete cycle. Put it at the back of your mind. It is as simple as that. You don't need to complicate anything. There's no need for any kind of complication. It is actually just as simple as you've seen it. And well, a whole lot of like I said, I use my phone a whole lot of time to trade than my system. So ADR, I actually don't use ADR for anything because I am more comfortable, convenient with my phone to trade than any other any other instrument. That's just simple truth. Now, this is our ADR, 3 times ADR. So let us go to our chart and actually check what ADR is all about. Like I said, you can't see these things on just you can't just see this thing on system, but you can see it very, very well on what on phone. Now, look at this. I want to show you a particular come to this side of my screen. Okay, do I have the ADR on this template? So let me just move my chart. I think I do, but let me move my chart. I'm coming. Hold on. My what's it called is disturbing the chart. Good, good, good. Can you see something? There's something here you need to see. Look at these. Look at these. Can you see 3 times ADR? So a complete cycle on GU, right? Are we on GU? Okay, GBPCHF should be what? About 280 something pips, not compulsorily 280 something. It can be a bit more, it can be a bit less, but it should be about 280 something pips. Now let us look for a particular chart, a particular cycle, and check these things out. Okay, let's check this out. 280 something. Can you see? Let me pick it from the various low. This is our okay, sorry, this is our peak here. This is our level 1, level 2. Okay, let's count it right. Let's count it right. So we will not make mistake. Okay, now you can agree that this is our peak formation low, market drop here, return back down, did a very long consolidation, the market rose again for a second level, the market pull up for a third level. Now, we call these things 3 times ADR. It means this thing has happened, has done a 3 times what? ADR. Now, let's check. Let's check it out. How many numbers of pips? Okay, I have about 296 there, right? You see, a cycle, I said 280 what? 282, and I have about 296. It is, you see, it is actually as simple as that. They said average daily range. They didn't say average daily pips. It is a range, right? It could be a bit lesser, it could be a bit greater, or you will actually know the range to which a pair can move a complete cycle, especially on 1 hour. Right, on 1 hour, importantly. So because 1 hour is a day, whatever the market, they do their dayline separator using it has a daily dayline separator, right? So like 4 hours now, it has weekly separator, like all these dotted line here is daily. So this is our complete cycle. Our complete cycle is about 290 something pips, and our average daily range is about what? About 280 something pips. I don't know if you get what I'm trying to say. That is exactly how these things work. That is exactly how it works. So this is our ADR. Now, let me try and explain in a day how you can go about your ADR when you want to use your ADR in a particular day, probably when you see your setup. Now, look at this. This is the low of the day. ADR means a particular market, you don't move past a certain number of pips in a day. Now, this is about 90 pips. Now, 90 times 3, let me see. Yeah, 92, let's say 92 pips. 90 times 3 is 270. Now, I think we should have about 96 pips per day for AUD, CHF, GBP CHF to move in a day. That means from the low of the day to the high of the day of every day on GBP CHF, it should be within 90 something pips. Can you see? This is about 93 pips, and we calculated 96 pips for what can happen within a day on what, on how many pips it can move within a day on this particular pair. I hope you understand what I'm trying to say. I hope you understand. Now look at this. This is the low of the day, and that's the high of the day. So GBP CHF moved. We move 283, 282 divided by 3. That's about 96 pips or thereabout in a day. Can you see? And when we calculated it, it moved 92 pips. Now let's check another day. So you won't be like, okay, what's this guy saying? Now we have situations whereby, yeah, the move past, you don't expect it to be 100%, but it will give you an idea of what the market is likely going to do. Let's check this out. It's not every day it happens. Like I say, okay, this is just a gap. So let's check this out. Can you see? 89 pips. Now look at this situation. This is way more than what we should expect. Let's see. This 146 pips. Like I said, it does not happen every time like that. But if it passes 90 something pips, you should be, if it's like past 105 pips, you should be closing your trades around that particular region, because the market might likely reverse. The market might likely what? Reverse. So you understand what I'm trying to say? In a day, it is ideal for them to move AUD, GBP CHF within 90 something pips. We can have it below 90 something, we can have it above 90 something. You should understand now. All right, let's take another pair. Let me take another pair. For that, let's check another pair. Please hold on. Okay, while we check another pair, let me bring in another pair. Okay, let me clean this up. Okay, now let me go to 15 minutes. Maybe we can easily understand. Let me just leave it here. This is how many ADR? 180 ADR. That means 60 60 ADR for one day. 3 times ADR for this particular pair is 180. Can you see? 3 times ADR for this particular pair is 180. So it means that a complete cycle on this particular pair should be about that 180 range. So let us zoom in. Let's look for a complete cycle first. Hold on, I'm coming. Okay, yeah, this is a complete cycle here. This is a complete cycle here. So obviously a complete cycle. So let us check how many pips we have. Remember they said 180. Can you see? Can you see about 189 pips? About 189 pips for our complete cycle. And they said 180 pips. So each day should it be more than 60? Let's see. ADR1. See? Coming. Let's see. Can you see? This one is 72, which is actually not bad. 72 from 60, which is okay. This one is 80. Okay, this one is way much. Okay, so the moment is actually off 60 pips in a day, you shouldn't hold that market more than that because you can reverse that market anytime. And this one is not even up to, this one is about 50 pips. So that is exactly what it means. That is exactly what it means. So these things give us this ABL. I don't use it personally, but I just have to teach you. I'm coming. Let me drag this thing again. I just have to teach you for those that would be that are always 100. Can you see this one is 160 plus pips for a complete cycle? And if we have to check everyday ADR, let's check everyday ADR. You remember I said from the high to the low is about 60. Yeah, this is about 60. So you see what I'm trying to say? So from high to low of a particular day, this is about 50 something. So this is exactly how these things work. I hope you are able to get one or two things. I will give you assignment after the complete section, the part two video. When I'm done with the part two video, in the part two video, I'll give you a very detailed assignment where you will put all these things inside a particular chart and you understand, do it all together. So I'll see you soon in the next video.